Good evening, everybody. Can you hear me properly? Good evening, everybody. Yes. So please tell me from where to start, guys. From where to start? Just tell me. I don't know. In the last lecture, I saw that the students were losing connect basically because it was getting a bit heavier for them because they had not revised and not getting time to revise. Basically, it is too much like exams are in front of us. So just tell me, that which topic you want me to start from. Even if it is a overlapping thing, I am fine. Yes. So who all are there? Tell me. I can see two, three names. Viru is there. Pooja is there. Mansa is there. I can see only three names. So guys, did you revise this part? Did you revise this? All this? Did you revise? International fisher we can do later. Mansa, we should get into the more this thing, the important parts actually. Okay, Priyanka is there. So do you want me to revise this long-term investment thing? Hi, Harsha. Okay, great. So do you want me to revise this long-term investment thing or you are fine? Please, if you answer me properly, it will be of great help to me. You want me to revise this part, long-term investment, and then go ahead? Or you were fine with this? So then we can start with purchasing power parity theory. Okay, you revised. So from which topic should I start? Should I start with purchasing? Now again I ask. So are you all fine with the portion? All of you could manage with the portion, like kind of. Okay, you revised long-term investment. Okay. Proceed to the next topic. Priyanka says, okay, fine. Not a problem at all. So what we can do, I okay, I would want to keep a word for Priyanka. Okay. So it will not take more time, hardly 5 minutes, and you would be sorted on the long-term investment. And then we can start with the purchasing power parity theory. Okay. Hi, Avinash. How are you? Okay. So long-term investment, as I was telling you yesterday also that 2 minutes only, not more, just relax. Okay. So I was telling you yesterday also in the last lecture that long-term investment is now a new topic, international project appraisal. Okay. And for that matter that they have segregated this topic into a separate category of topic. But still I do at least one or two sums here in Forex also, because I feel that I always used to teach actually. So there is a comfort of the structure flow also, to be very, very honest actually. And I don't want to leave that my comfort of teaching that, okay, if this was taught in a particular manner, I should continue and then I can take it separate way also, like in the IFM topic. Actually, it works positive for the students because you are, I introduce you with this topic here only. You get to have some idea about the topic, and when then I start IFM, it hardly takes time to finish the topic because IFM is nothing. It is nothing but it is Forex only. Okay, and Forex is done, you know everything about the basics and everything. Then you also know about the international project appraisal because because it is a fast track batch, I could take only one question. In the regular batch, I do at least 4 or 5 questions here only of different categories. And then in IFM again, some 5 or 7 categories different. Okay, but here I cannot take all of them as I am, we have to finish the portion faster. Okay. So always remember one thing, there was a clue here that whenever you are suggesting classes to someone or you yourself are taking classes, okay, always remember, students do compare the number of hours. Okay, this is like 250 hours, it is too lengthy, I will take 150 hours. You forget one thing, that if there is a portion, maybe I always tell in the class that if there is a portion which is supposed to be like, for example, if there is a day and you like if you want to do something in a shortcut, that means you are compromising on the quality. When I say compromise on the quality, that means definitely some questions have not been taught to you, or you have been deprived from the learning part. It doesn't mean you need to go 400 hours or 300 hours or something, but there has to be some reasonable amount of hours that you need to invest in a particular subject. You cannot take shortcuts. It will not help you in the examination. By fluke, if you get a very easy paper, then you will be able to manage it, and then that paper doesn't become a standard in the market. That cannot be. The standard is historically at least 30-40 papers. If you see, then only you can say, okay, this is the standard. 2-3 papers of sampling is not a standard for that matter. Okay. So long term, it says that DK Limited is considering an investment proposal in Sri Lanka involving an initial investment of LKR 25 billion. The current spot exchange rate is INR. Correct. The risk free rate in India is 6%. Okay. Because I always feel that I am not teaching, I don't teach at a very low speed. My regular student know this part, that I don't teach at a very low speed. My speed is quite good actually. I mean, it is not too fast, but it is not too slow also. And irrespective of that, if I am taking like 220 hours at this point of time, SFM regular batch I take, and 250 hours I would need for the AFM batch, because they have added one chapter there. Okay. So and none of the questions are repeated in the book. They all can vouch on for that matter. Like Harsha, I know she has taken classes from me. Viru, I know she has taken classes from me. So my teaching speed is not too high. I mean, it's not too slow. I mean, properly saying, it is not too high. It's not too slow also that I unnecessarily like stretch the lectures and all. No, I don't do. We don't talk anything extra in the class too much, to the extent it is a very power packed lecture. Still I get into like 220-250 hours, but none of the questions are repeated. So when I am preparing a fast track sheet or a marathon sheet, it is a big confusion for me that which one should I take and which one should I leave, because all of them are equally important and the adjustment in all of them are very, very different. So that becomes a very big challenge on my part. For example, all the students of our classes are telling me, ma'am, please give us important questions list, which I am preparing already. In 2-3 times you will get the list of important questions from every chapter. Students who have taken classes for me, I'll give you the markings of the question number, okay, in your book. And students who have not taken classes for me, they get a separate sheet for that matter. I am finding it very difficult which question to take and which question to leave, because I am a person, if you give me a coloring pencil, I'll color everything. I'm so risk averse actually. Without wasting time, let's start. Kind of some visarjan thing will come, suddenly the voice will increase too much. Okay, DK Limited is considering, okay, proposal in Sri Lanka, okay, involving an initial investment LKR 25 billion. So DK Limited is an Indian company and it has got an investment proposal to invest in Sri Lanka. Okay, I'll go slow guys. Okay, I personally feel that we will not be able to finish Forex today. It is not possible because portion that we left yesterday was a good amount. Okay, and what I can see that students are losing comfort if I take too much of portion. So please do not spoil the idea of the classes, actually the learning part. Okay, you have the whole day, you can learn anything for that matter, you do other subjects, revise it properly, then only it makes a sense. Unnecessary loading of the content to your mind will not make. I will be there, don't worry. So take small portion, okay, swallow properly, digest it properly, come back again 2.5 hour lecture, again go, and like that. That makes more sense. Even if it takes 2-3 days more, it is okay, but don't spoil the comfort of learning. I saw yesterday that students were losing comfort. So I got a bit worked up on that part. Anyways, the project will generate a cash flow of LKR 5 billion in the first year. The cash flow will increase by LKR 1 billion each year for the next 4 years. 5, 6, 7, 8, 9. Okay, the project will wind up on completion of 5 years with no salvage value. The required rate of return for the project is 8%. Always remember this 8%, the required rate of return word. Can you see there are 3 rates here? Careful. 6% is a risk-free rate of India. Okay, 5.02% is a risk-free rate of Sri Lanka. Okay, and I told you that exchange, basically, kind of the ROR part, if you really want to learn properly, the ROR part will have 2 parts: the risk-free rate inclusive of inflation, okay, and the risk premium part. So basically for India, they have given 6% is a risk-free rate and they have given ROR as 8%. Always remember, the rate given to you will belong to the company, DK Limited. Okay, DK Limited belongs to India, and hence this 8% will belong to Indian shareholders. No change even if they do not give you anything in the question. The main adjustment of this question is actually this part. This part is the main adjustment, and hence that 8% can never belong to can never be a discounting factor for the shareholders of Sri Lanka, because Sri Lanka is a foreign country for me in this question. Okay, so now they are asking you to calculate the NPV of the project as per the home currency approach and as per the foreign currency approach. So as per the home currency approach, guys, the first thing that you need to do, your investment is in Sri Lankan because the project is in Sri Lanka. Okay, so you need to convert that into home currency, that is rupees, and for that you need exchange rate. Okay, spot rate is given. Beyond that, they have not given you any exchange rate for year 1, 2, 3, 4 and 5, which we can calculate using the IRP theory. You have the spot rate, you have the interest rates 6 and 5.02 for India and Sri Lanka. Using that, you can calculate the exchange rate. Look at this. Can you see this? So 1 plus NIA by 1 plus NIB. N will not come here. Why? You are computing the exchange rate for a project cash flows. A project cash flow would be by default for 1 year. So you can see there is no N here naturally. Okay, so these are the rates. Priyanka, could you understand till here? Priyanka, could you understand till here? Okay, then in the home currency approach, these are the cash flows. Okay, you convert them on the basis of the calculated exchange rate. Okay, you get in rupees, using 8% discount and get the NPV. Okay, then going further for foreign currency approach. Foreign currency approach, we only need this data and this data because NPV has to be calculated in Sri Lankan rupees actually. So we don't need to convert that, but we need a discounting factor which is not given to you in the question. So what do I do? So I know that 6% is the RF of India and 8% is the ROR of the project of the Indian shareholders. That means 2% approximately is the risk premium that the shareholders perceive from the project. Okay, so assuming that the risk premium component for both the shareholders is same, that is 2%. Okay, we will apply that 2% to 6.02. Okay, I hope you got the point. 5.02, sorry, but here I am doing plus minus. Okay, but you cannot actually do plus minus. You will have to use a compounding and the discounting part. So basically 1.08 is the rate. Remove the or maybe like, how can you say like that? How do I say? 1.08 divided by 1.06. That means out of 8%, I am removing this thing. I am removing this thing. Okay. So as a result of that, you are left with risk premium. Look at this. Can you see 1.08, this thing? And then you get this one. So minus 1 into 100. Because you are doing compounding discounting, you will not get exactly 2%. It is slightly like, you know, what do you say? It is slightly less than 2%. That is okay. And then this risk premium of 1.887% is multiplied with the RF of Sri Lanka, and you get a discounting factor 7%. Using this 7%, you discount the cash flows and you get the NPV. Okay, but this NPV is in terms of Sri Lankan. Be very careful. This is a very important adjustment actually. This is in terms of Sri Lankan rupees. Can anybody tell me this is NPV? Where is it standing on a timeline? T equal to, on a timeline, if I draw 0 to 5. Okay, where is this 3.1477 standing? Can anybody tell me please? Zero. Very good, very good. So if you want to compare the NPV computed by two methods, number one, this one, okay, this one, this is in rupees. Yes, very good. This is computed in terms of rupees and this is in terms of Sri Lankan rupees. Suppose if I want to convert this into rupees, you can use a spot rate here to convert. So ideally this is a cross check for you, that the moment you convert using a spot rate, this Sri Lankan rupees, you will get this answer which is very similar to the first answer. It has to be. If it is too much deviated, that means you have done some calculation mistake, and we are done guys here. Now the next topic that we have to start is the purchasing power parity theory. So there are three forms actually of purchasing power parity. Number one is called absolute form. It is given in the module actually. Okay, then the second one is relative form and the third one is expectations form. Okay, usually guys, if you get a tough question on the purchasing power parity, there are, I'll write that, I don't want you to miss out on that part. Absolute form, okay, and then relative form and expectations form. So basically this is very easy. This is very easy. This is very easy. Okay. Why is it easy? Because this is exactly as IRP. Expectations form means, suppose I give you the spot rate as rupees 80 per dollar. Easy. And then expected inflation. Okay. Is suppose I rupees is suppose 8% and I dollar is 5%. Okay, so you can simply apply your IRP formula, okay, the way you apply, and that, but there will be no time adjustment, because in interest rates there can be time adjustment, in inflation rates there cannot be time adjustment. It has to be for whole year. So nothing you have to do, 80 into 1 plus IA by 1 plus IB, and you are done. That is expectations form. That means to say, can I say one thing here, that the method that you used here, suppose instead of risk-free rate, assume instead of risk-free rate, they would have told you that the expected inflation in India is 6% and expected inflation in Sri Lanka is 5.02%. Then could you have used the same method? Okay, I mean, it is in your mind whether it is IRP or PPP. Okay, you could have used the inflation rates to calculate the exchange rates for the future years for that matter. Guys, are you able to understand what I'm saying? Are you able to understand? That is expectations form. Okay, please tell me. Okay, so the next one is relative form, which is the most important one in case they ask you in the paper. Okay, relative form. So okay, thank you Avinash. So basically I want to tell you something. You will answer now that interest rate, careful, interest rate, you always stand on a time when we talk about interest rate. Okay, so suppose I stand here, this is 0, okay, and this is 1 year. So if I stand here, okay, so interest rate is a future concept or a past concept? Harsha, I'm saying that if you have got like I mean to say expectations form of PPP is same as IRP only. That means instead of interest rates you will apply inflation rates. So if they would have given you, instead of saying risk-free rate, they would have said you inflation rates of India and Sri Lanka. So basically the formula remains the same, but instead of using, I mean for the heading part, you won't say I am using IRP to compute the exchange rates. You will say I am using PPP to compute the exchange rates. Are you fine now? Okay, so now going further, please answer all of you that this interest rate as a concept is a future concept or a past concept. Till the time you answer me this, I won't be able to move ahead. Very good, Bharat. Very good. Very good. And now tell me, Bharat, that means to say there you need a clarity on that. So suppose I stand at 0, okay, and somebody borrows money from me and I quote an interest rate of 10% for 1 year. Okay, that 10% does not change. On the day of maturity after 1 year, suppose you borrowed 1 lakh rupees from me. On the day of maturity, by default, you are going to pay me back 1,10,000. It doesn't change at all. But inflation is a future concept or a past concept? I am saying if you have a future, if you have an interest rate, it is decided at 0 and applied on the day of maturity, correct? And that is why I am saying it is a future concept. But tell me about inflation. Inflation is a future concept or it is a past concept? Can you tell inflation, okay, I told you now that you should be only 10%, stop it now. Will it behave like that? Will it stop if you tell your inflation maybe 1 year back, if you tell your inflation, suppose I say that, suppose I am standing at -1, assume it is -1 1 year back, and standing here, if I say to inflation, the expected inflation in India is 10%, okay, the expected inflation in India is 10%. So after 10%, will it stop? It will not stop. And by default, inflation, the actual inflation rate is calculated once it has already happened. You can just estimate, but whether it will turn out to be 10% only, that you cannot guarantee. But in case of interest rate, you will guarantee. It is not meant for past, it is meant for future. So as for inflation, we always calculate when it has already happened on a post facto basis. Please be careful on that part. Now, coming into relative form of PPP. So suppose if I draw a timeline here, like this only, okay, suppose I write here 100, okay, and I get 110 here, possible? So the total earning during this period, is 10%, okay, and then I come to know, standing here, okay, then I come to know that the past year inflation was 7%, okay. That means to say, out of 10 total percent, that 10 is called nominal return, means total. And I come to know that the last year inflation rate was 7%. Can you guys, all of you, answer me that how much is the inflation component and how much is the real rate of return? Please answer. I don't move ahead till the time all of you have answered to me. So please tell me from where do you belong, all of you? Harsha, Avinash, Priyanka, please tell me. It will give you some comfort, guys. Talking a bit apart from studies will help us to connect better. 3%, very good, very good. Bharat says 3%, it is correct. So do you agree to the fact that till 107 my money has not increased only? Bharat says he comes from Bangalore. I was in Bangalore on Raksha Bandhan. I was in Bangalore because my brother stays in Bangalore. It's a nice city. You have very good food joints there. Avinash is from Telangana. Okay, Hyderabad. Shri Harsha is from Hyderabad. Wow. Hyderabad. I went to Hyderabad also last December. It's a very nice city. I liked it actually. I can't talk in the public, but there were a few food preparations that I really liked actually. Really, it was very nice. I went Hyderabad for the first time in December actually. For the first time, I wanted to see that city. So we went on 25th of December around for the sake of holiday, 3-4 days. But I like the city a lot. It is a very peaceful and nice city. Ethnically, it is very integrated. Who is PJ sir? Who is PJ sir, Bharat? Shruti, okay, maximum of you are from Hyderabad and Bangalore only. Who is PJ sir, Bharat? Hyderabad dum biryani. I don't eat non-veg. I am a vegetarian. No, some South Indian preparations related to some dosa and all. That was good actually. So I come again, Hyderabad. Bangalore, so I have to come because it's my brother stays there with the family. So I keep on visiting him at least one in a year. I do visit Bangalore, and there are more relatives also. But then Hyderabad is like something I plan to come again, maybe in coming year only. So maybe when I'm coming, I'll maybe like if I get time, will definitely keep a meetup out there. Okay, if possible, if you guys are free. Acha, Punarvas Jay Kumar sir. Okay. What does he teach, Bharat? What does he teach? I know him. I don't know him personally, but I've heard of his name. Not that he's a unknown faculty, he's a known faculty. So what does he teach? Okay, so Bharat, uh, say my regards to him. Okay, tell him that Archana ma'am has said regards to you. Okay, can you do that? Just message him on my part. Yes, I will definitely, Harsha, I will definitely do that. At least, sweetheart, I will definitely want to meet you. Yes, yeah, definitely. Just say him that I have sent my regards to him. Okay, let's start. Are you now settled, all of you? Comfortable? Can we go move ahead? Okay, thank you everybody. Okay, fine. So now here, guys, now I think we are better off now. You are less stressed out now, like, right? So it is not important to push yourself always. This is a trick. I did it intentionally. You are not sitting in front of me, but I can feel that stress vibes coming to me. Okay, so I wanted to release that part. Now you are more comfortable, because it is important to move your brain out of the situation for a moment and come back again. You would always feel better off. Thank you, Harsha. Okay, fine. So here, guys, as Bharat said, told me that basically 110 is an 110. Manasa is from Andhra Pradesh. Which place, Manasa? What? And Priyanka Mehta is from Bombay, I understand. What I understand from her behavior, I understand that Priyanka Mehta is from Bombay. Okay, Meerut. Okay, Priyanka is from UP. Okay. I travel a lot. I travel a lot. So, acha, Meerut. You told Meerut. Okay, great. Chalo, let's start, guys. Otherwise, we'll lose time. And some big Visarjan will come starting their all drums and everything. So, we'll have to keep quiet for 10 minutes then. Okay. Start. So, basically, guys, as Bharat told us that the nominal return is 10%. Okay. The nominal rate of return is 10%. What is nominal rate of return? The total change. 110 minus 100 will give you 10%. Correct? No? Now, do you understand one thing for sure, that if the inflation rate last year was 7%, then my movement of money from 100 to 107, my money has not increased at all. I am trading at par only. Means, suppose I was able to buy 1 kg of wheat at a price of 100 last year. Because of the inflation, same 1 kg of wheat will trade at a price of 107 next year. Okay. So if your money does not grow to 107 also, that means you have deteriorated in terms of purchasing power parity. Okay, but if you get 107, that means you are at par, and if you get more than 7, you have actually earned a real return. Okay, that is how. Pooja, you are from Rajasthan. Which place, Pooja? Oh, you all are from out of Bombay only. That's, I mean, I am from Rajasthan, kind of, if you ask me. I am from Rajasthan originally. Yeah, I am a Marwadi Agarwal. So that way, everybody wants to share. See how good it is. Fine. So we need to now we need to stop our talks, because the recorded people will get very irritated now. Okay. Now here, guys, same logic I applied here also. Same logic I applied. So they say that spot rate 1 year ago. Can you see here? Spot rate 1 year ago. Spot rate now, that means at 0. Inflation last year in India was 8%. Okay. Inflation last year 3%. Okay. Now what I'm wanting to tell you is that nominal appreciation of dollar. Okay. Nominal appreciation would be, look at this. Keep this example in your mind. Keep this example in your mind. Okay. When you are solving this. So basically today's rate is 43 and the past 1 year rate is 40. Nominal return on dollar will be 43 minus 40 by 40 into 107.5%. Careful, very easy. There is one question which has been asked in the paper. Exactly same question. I'm teaching this question since last 15 years. We never got a question on this category, and that is why the students keep on telling in the market that Archana ma'am teaches more because she's not a chartered accountant. She doesn't know where to stop. It's not like that. I show you a question. I'll show you a question. Look at this question, question number 15. This question, I don't know from where it is, I mean RTP, MTP or exam paper, but this question comes from any of these material right from November 20 to May 23. I don't remember from where, but this is the question. You can solve this question on your own once I've done my question. Now, this is not institute question, this is my question. But I'm teaching since last 15 years. I always tell students that, and that is what happens. Then students say the paper was very tough. We were not prepared enough. We were not prepared enough. How can you say them? It is a competitive exam. They need to maintain certain standards in the examination. Why do you expect them to have just cut paste paper? It's bad to think like that. Okay, come on. Now, nominal 7.5%. Now, rare. This is a very, very important concept here, guys. Rare. What is this? Now, careful. I want to show you something. Okay. So, suppose, guys, here, you will answer me, okay? I'm standing at 0 here. And when you apply IRP, how do you do? You write S into 1 plus IA by 1 plus IB and you get a forward rate. That means suppose it is 1 year, we directly travel here. If I use this formula, spot is here. The moment I apply this formula, I will travel to this place. Yes or no? Yes or no? This is front gear. The moment see, this is examination time. I can't get into too much of logic, though I know, because you will not be able to hold on to logic and formula both. So I will tell, but not too much into the detailing, not required. That is a regular thing. Okay. Okay. So basically, guys, if you multiply 1 plus IA and divide by 1 plus IB, you get a forward rate. You travel into the future. Okay. Can you please answer me that if I do reverse, what will happen? That means when you multiply 1 plus IA to S and divide 1 plus IB with S, you get a compounding effect. That means from 0 to travel plus 1, I mean 1 year. What if I do reverse? That means S into 1 plus IB divided by 1 plus IA. What do you say now? Tell me. What do you want to say on that part? You will take a front gear or you get a reverse gear? Tell me quickly. You get a front gear or a reverse gear? If you do exactly opposite, that means S into 1 plus IA divided by 1 plus IB gives you a compounding impact. Backwards naturally. Yeah, backwards you will go, right? It will give you a discounting impact. Now, this 43 has got inflation. I want to know what rate should have prevailed at t equal to 0 if India and US did not have any inflation component. That means you need to eliminate the effect of inflation from here. Look at this. So 43, 1 plus IB divided by 1 plus IA, you get a rate here. That means if there was no inflation, you didn't have gotten 43 rate, you have gotten 41.01. Now I want to know the way you compared 107, if I write somewhere 107. Similarly, so now 41.01 minus 40 by 42.53% is a real appreciation. Okay. Guys, you could have calculated otherwise also. I tell you how. The total change is what to do now? I never told anybody. I learned classical music, singing, vocal and harmonium for 5 years when I was a child. Guys, all the people who are in, we are enjoying a lot because we are in live mode. All the people who are in the recorded mode, we can't help too much. Okay, so you have to bear with this. I can't go, I can't stop. So we are stuck in this midst of those Visarjan thing and drums, everything. So we'll have to bear. So should we go ahead? Should we go ahead? Let's continue then. Let's continue. Okay, then it is great. So 2.53%. One thing I wanted to tell you is that, careful. The inflation last year was 8% in India, and the inflation last year in US was 3%. So 5% is the net inflation impact, right? 5%. Look at this. The total change, careful, the total change is 7.5%. Okay. That the total change is 7.5%. Out of 7.5%, 5% is the net inflation component. That means the real appreciation has to be 2.5%. Though you calculated, but you could have guessed out right also. The total change is 7.5%. The inflation component will be 8 minus 3, 5%. So out of 7.5, if I segregate the into two parts, the inflation component will be 5%. So naturally the real inflation has to be 2.5%. Okay, this is 2.53 real appreciation of dollar. Okay, then they say similarly, I have given you the notes actually. If you want to forward rate, we take this. If you want to backward rate, it is 1 plus IB by 1 plus IA. Please remember what is that value, 41.01. 41.01 is nothing but the rate that ought to have prevailed if there was no inflation. Okay, that is called real effective exchange rate, means rate which does not have an inflation component actually. Then nominal appreciation of rupee, nothing guys, there you did F minus S by S, here you are going to do S minus F by F. So 40 minus 43 by 43 will give you minus 6.98% naturally, and real appreciation of rupee will be again S minus F by F. So same logic, S minus F by F. So 40 minus 41.01 and you get minus 2.46%. That means the total appreciation in rupee was minus 6.98 and the real downfall in the rupee was minus 2.5%. But because of that mathematical error of base effect, you don't get 2.5, you get slightly lesser than that. So we can do question number 15 now. हाँ बहुत loud है. I'm not able to speak also. I'm not able to speak also. Okay. Question number 15. A US investor chose to invest in Sensex for a period of 1 year. The relevant information, this is the institute sum, okay? Size of the investment is 20 lakhs. Quickly guys, 1 or 2 sums, whatever we can do, just finish it off so that we can wind up with Forex tomorrow at least. Okay, size of the investment is 20 lakhs. Then spot rate 1 year ago, is rupee per dollar 42.50/60. Okay, then spot rate now is 43.85/90. Sensex 1 year ago is 3256. Sensex now is 3765. Inflation in US is 5%. It is an important question from the examination perspective. Be careful. Inflation in India is also given to you. Okay. They say compute the nominal rate of return to the US investor. Compute the nominal rate of return to the US investor. Guys, this question is very, very easy actually. There is nothing in the question that kind of हाँ बहुत loud हो गया ये. Guys, what should we do? Tell me no. Should we keep a lecture at 11 tomorrow? Will it work for you? Will it work for you 11 to 2? 11 to 2 इसलिए बोल रही हूँ because 9:30, yeah, 9:30 is something my lecture stops. Even if I start at 9:30, I reach my office 11 o'clock. It will not stop today, I know that. But why are we wasting time unnecessary? You can study. Should we continue? At least let us finish this part if you... Bharat, but it is disturbing me a lot actually. Okay. Compute the nominal rate of return to the US investor. So what will you do? 20 lakhs is the size of the investment. Okay. So if the spot rate 20 lakhs is the size, the surplus funds basically. So you sell those dollars at the rate of 42.50. Okay. And then you come to India. Start your calculate. So 20 lakhs into 42.5 will give you 850 lakhs. 850 lakhs. Okay. And then guys, they will invest in Sensex divided by 3256. Okay. You get something, some units, 26,105 shares. Then again multiply by 3765. I get 98 something. Look at this guys. Nothing you have to do in this sum. Basically you are a US investor. Okay. You are a US investor. So 20 lakh dollars you convert at the spot rate. What you get is 850 lakh rupees. Careful. Using this 850 lakhs, what you do, you buy Sensex at the rate of 3256. Okay. You get these many shares of Sensex. We have done similar sum above also, which I did for you, if you remember at all. I did a similar sum, if you remember. I got dollars. There are two purchases. Do you not remember that part? If you are a national and if you invest in a foreign country, you are selling your home currency, buying the foreign currency and so on. There was a sum out there. This is the same sum actually. Then you sell those shares at the rate of 3765 and you get this amount guys. You get this amount. Now while going back, you again buy dollar at the ask rate. The rates are given to you. When you divide that, you get this amount. Now you take a difference. You invested 20 lakh dollars and now you have 2238,846. So gain in dollars this much and the percentage rate of return is 11.94%. Did you understand this part? Okay, this we already did actually with my example. That is also my sum. That sum is not from the ICI, but I know these concepts will be tested today or tomorrow. I have been teaching since last 15 years all these sums. I know they will, because I have not, though I am not a chartered accountant, but I have done so many curriculums. No, we understand what will be the next move of ICI in terms of the difficulty level. So we try to do those sums pre-hand. I cannot predict when they would be asked, but they would be asked someday. That is how. Now they say that, what is the next question? We are done with this. Compute the real appreciation or depreciation of rupee, they are saying. Okay, so for that guys, how they have done? Again, they have calculated the real. Do you remember calculating this part? This part, do you not remember? Okay, so real, in order to calculate this, you need to calculate this 41.01. So what will you do? Look at this, what they have done. What they have done, 43.85. What is this 43.85 here? Give me a second. 43.85. This is the rate, no? So this is the rate. Okay, and what they have done guys, why did they take 43.85? Can anybody tell me why did they take 43.85? Because if you remember at all, we sold dollars at 42.5. It is a very silly question though. Thank you, Mansa. Okay, you tell me something. Though I sold dollars at 42.5 and bought dollars again at 43.90. If you have forgotten, let me tell you this. Look at this. But while computing real effective exchange rate, I am taking 43.85. Why? Bharat, can you tell me why? It's too much of a noise today actually. Bharat, can you tell me why am I taking? No, it is not. It is not about that. It's not about that, Mansa. Exactly. It is a bid comparison. Yes, very good. Now at 0, which rate did you use? You used 42.50. Exactly, correct. So at 0 you used 42.50. Okay, so after 1 year, if you want to see the comparison, okay, what is the appreciation or depreciation, you need to use a bid rate only, you can't use a ask rate. Okay, that is why. So 43.85, okay, is the rate today, as of today. And what you will do, inflation, so 43.85 into 1.05 divided by 1.09, that means 1 plus NIB by 1 plus IA, reverse calculation. Yes, very good. Look at this, they did the same thing, 42.24. This is the first time in my 16 years of teaching that I have seen exactly same sum which I have been teaching, waiting to see these questions in the examination actually. But they never asked. But the day they ask, you will not be able to break it. Okay, then real appreciation. So basically what I understand is that what do I call that rate? Maybe S minus F, okay, the formula would be, so 42.50 minus 42.24 by 42.24 into 100. Guys, this is wrong, no? Don't you think this is wrong? This one is wrong, no? This is wrong. What do you say? Bharat? Avinash, is it not wrong? As per the formula, it should be S minus F by F. So it should be 42.5 minus F by F, and it is not something into the formula. It is like it has been derived from 1 by F minus 1 by S divided by 1 by S. So we solve it to get S minus F by F. It cannot be anything else, not possible only. So by that understanding, logical, don't you think it is wrong? It should be 42.5 minus 42.24. 42.24 is the rate that you calculated just now. So on a timeline, just see, it is equivalent to, this rate is equivalent to 41.01. So this is wrong basically, I understand, right? Just check it out, guys. Now the third question is, what should be the exchange rate if relevant purchasing power parity? Yeah. What should be the exchange rate if relevant purchasing power parity holds good? So what will you do? 42.50 normal expectations form. They are saying if you are standing 1 year behind, then what should have been the rate prevailed, okay, on the basis of inflation only. So like IRP, just calculate. For two rates, they have calculated 2 and exchange rates are given to you, 44.12 and 44. This shouldn't be a problem. Guys, please write down this question and practice, because you will goof up with the basics. Understanding will not be a problem in this question anymore for you. Okay, then real return to the Indian investors. What will you do? You will calculate the return of the Sensex and divide by 1.09 the inflation component, and you get 6.08%, and we are done in the question. Guys, let it stop for a second because it is disturbing me a lot. It is very loud in my back actually. I know you can like calculate, you can understand, listen my voice, but I am getting disturbed a lot because of the noise. It's too loud. So now question number 16, let's try out. 16 number sum. Mr. Mammon, an Indian investor, invests in a listed bond in USA. If the price of the bond at the beginning of the year is USD 100 and it is USD 103 at... Yeah, we should take a break, I feel, because it is too loud for me at least. I am losing my voice against this voice of drums actually. Guys, whatever it is, let us do some portion which is, these portions are easy, so we can manage that, okay, with this noise. But if there are critical like fate of a forward, I won't be able to do today because it's very important topic. We don't want to lose out on the understanding part at all. So maybe we can do some easy stuff today and wind up, and then again we can sit tomorrow for 2 hours. But I feel that those 2 hours should be in the first half only. It cannot be in the second half anymore for 2-3 up to Thursday. It is not possible. It is too loud, guys. I think it is no point studying like this. Like whole day I was, kind of doing my. We could have taken lectures in the evening only, I feel. So till Thursday, Thursday will be dangerous actually. Thursday will be dangerous. So on Thursday we cannot have lecture in the evening because that is the last day of Ganpati Visarjan. Even on the 7th day, that means to say, yeah. So guys, let us stop today because it is no point waiting for this to get over. You can go and study and revise your portions. We'll have to sit 3 hours tomorrow and finish it off. Should we do that? Because it is no point, we are wasting time. Study something else, it is okay because it is too much heavy. Yeah, because no point, guys. What time tomorrow? What time tomorrow? Should we start at, like, what do you say? Should we? I'll inform you on the group. All of you are there on the group? All of you are there on the group? देखो मेरे पास 2 स्लॉट रहेगा. एक स्लॉट रहेगा काइंड ऑफ 10 o'clock to 10 to 11, 11 to 12, 12 to 1. I need to finish forest tomorrow. I can't stretch it beyond, guys. It is not allowed. This is like this will be like too bad for us if we are not able to finish forest by tomorrow. If we are any which ways going ahead in terms of time, but can't help what to do. So maybe 10 to 1 is one slot available, but then let me see whether I will be, because there is a meeting in my office at 2 o'clock tomorrow. So I don't know. And another slot would be like maybe like 4 o'clock to 4 to 5, 5 to 6, 6 to 7, 4 to 7. 4 to 7. 4 to 7 would be another slot which I can manage, I think. 4 to 7 should we keep? What do you say? What is this, yaar? Four to 7. Okay, let's keep 4 to 7, guys. Okay, let's meet tomorrow. Study something, don't worry. Yeah, study because you have lots to study. You have law, you have audit and everything. SFM will be taken care of, don't worry. 4 to 7, yes. Correct. Bye-bye. All the recorded people, we can't help. There's too much of noise. Please bear with us. Thank you so much.